Hey guys, TommyBryson here, and the entire crypto market is running rampant. Everyone's losing money, but specifically this group right here is losing a bunch more money, okay? Because it's very volatile. And when something goes bad, guess what? The volatile stuff is going to take a massive hit. Now, the big question is, has this created a buying opportunity? Or is this a time where it's time to, hey, I'm going to jump ship and I'm out of here, okay? And by the way, you guys know me, okay? I'm the most boring investor on YouTube. I'm your grandparents' favorite investor because I invest with index funds and everything like that, okay? But I also have friends. I have a friend that he made a few couple $1,000,000 by investing into crypto. He continued to put money into it. He lost a lot of money. And I can only imagine right now how much money he's actually losing. And some of you guys are hitting me up and saying, Tommy, I'm losing money here. What am I supposed to do here, okay? So this video, I'm going to break everything down. What's going on with the entire market? Should you be investing more money into it, or should you be diversifying into something else? In this video, I'm going to break everything down. There's one thing that you never want to be. You never want to be the man with a hammer syndrome. And that basically means that to a man with a hammer, every problem looks like a nail. So whenever you think, well, crypto is just it, it's always going to be it, maybe that's not so smart. Index funds are always it. Maybe that's not so smart, okay? You always want to have an open mind, a lot more tools in your toolbox to kind of assess the situation to know exactly how to proceed and what to do next. In this video, we're going to cover everything. And as always, like, subscribe, hit the bell so you're notified, comment down below any questions, and let's get started, okay? But the first thing is, guys, what I'm noticing is, first, investors are running rampant because it's causing like a stampede in a sense, because whenever people are investing into something for the sake to try to get rich fast, which is most of the people invest into crypto. By the way, most people, they're not like, well, Tommy, the reason I invest here is because I really do believe in blockchain technology and I really do believe in a decentralized market and I don't want to worry about governments. No, it's not because of that, okay? That's just the little BS they put in there. But most of the people, I would say like more than 80% of them, they're just interested in making some money. I heard this person made a lot of money from this coin. This project came out. I want to put money into it, and hopefully, I'm going to be wealthy by summertime because I gotta go out and so on. Okay, that's why most people are putting money into it. So whenever it goes down and those people lose money, guess what? Everybody starts selling off and selling off and selling off, and that creates a stampede of sorts. On top of that, you have certain companies, brokerages, that are basically offering investors like 9% APY with no risk whatsoever, but they were heavily leveraged. And a lot of companies now that are involved in crypto, guess what? They're filing for bankruptcy and so on. And people thought their money was basically FDIC insured, but most of those companies, not really. It was a little bit more complicated. So that's why it's so important that the companies you invest into and the returns they're offering you, that you really understand where that money is coming from, how they're going to those investments. And it's usually the higher the return, the higher the risk. And there's no way around that, okay? You're not going to make 12% with no risk whatsoever when banks are paying you no risk like 2% or 1%, okay? For obvious reasons. It's all based on the Fed rates and so on. So it's very important to take a look at that. Now, as far as the actual investments themselves, the actual crypto tokens out there and cryptocurrencies out there, the idea is that either two things are happening right now. You have either a massive correction, and that means, for example, well, the market is down, everything is down right now. So we might, because of interest rates, obviously. So the big thing might be that the crypto market went ahead and corrected itself, and now this is the real value. Or we just might be seeing, for example, a temporary depression within the crypto market, and that creates, for example, a massive buying opportunity. Now, either of these two might be true, but I can't tell you which one it is. And if anybody out there on the internet is telling you, well, it has to be this or it has to be that, and it's just based on their opinion, I wouldn't take it like that, okay? Because it's very hard. It's almost impossible to know exactly which one it actually is in a sense, okay? But one thing I'll tell you guys is this, okay? Back in the year 2000, we had an entire tech bubble that actually happened, okay? And it's called a dot-com bubble, and there were a lot of companies coming out with new technology, these websites, these new tech companies, and so on. And that was like the Bitcoin back then, like the cryptocurrency back then, in a way, right? Because all these projects, people were becoming millionaires overnight, and that sounded pretty cool. So people went ahead and started putting a lot of money into it, and into this thing, and into that thing, and into this thing. But the entire idea was we're all just trying to get wealthy as fast as possible. It's not really investing on an investment basis where what your primary goal is to protect your money and to make some additional money on top of that without having to risk your actual capital, because you never really want to do that. But most people, whenever they invest, they're like, I hope I don't lose my money. You know, that's not really investing. That's more like speculation. Now, what ended up happening was when that bubble popped, a lot of those companies, they went kaboom. They went boom. And the money was actually evaporated. People lost millions and millions and millions of dollars. Now, what I'm saying is this, guys, okay? As far as the crypto market, am I telling you, for example, that back then there were no good tech companies? No, there were good ones, okay? You had Amazon, you had Apple, you had, for example, Google, you had Yahoo was actually good back then in a sense, right? Microsoft, you had good, legit technology companies, but you also had the majority of them being, for example, just trash. And then the big problem becomes, well, how do you pick out the good companies from the trash ones? And that is a very hard thing. So now you have, for example, well, which cryptocurrencies or crypto tokens or crypto investments overall, because there's just a whole bunch of different ways to actually do it now, should I be putting my money into? And which broker should I use? Okay, and now that becomes the hard thing. And the answer is usually the biggest ones are going to be the safest ones, and most likely the ones that are likely to stay for the long term. But overall, that's not even guaranteed, because you see big companies, they go bankrupt all the time, okay? And that happens, and that's normal in markets, and especially in capitalism with so much competition. So what I will say is this: the reason you invest your money into something is the most important thing, and the why is also super important. So everyone wants to make money from an investment in a sense, because that's why you put money into it. But if the reason that you bought, for example, Bitcoin at 20,000 or at 50,000 is just because Todd told you or Brenda told you, and because you heard on the internet that it's going to go up to $20,000, that's not really a good reason, because that reasoning comes from somebody else and doesn't come from you objectively understanding what you're putting your money into. And by the way, I got to be transparent. I don't put any of my real money into any of this stuff, okay? As far as the cryptocurrency, again, I am your grandparents' favorite investor. I do index funds and ETFs, and that's what I do. And less than 1% of my money, less than 1%, okay? I should do like a commercial for like Trojan or something like that, okay? But less than 1% of my money is in Bitcoin. And I'm talking about, like, I think it's like 500 bucks or something like that. That's actually in Bitcoin. And I bought at 10,000 back in a bunch of days ago, or what, like almost like 2-3 years ago, right? Because of video, and I wanted to experiment for the video, but it wasn't really investing basis. That's not an investment, because I'm not protecting my capital. I'm basically speculating for the sake of a video. So I'm very honest about that. That's not where I'm putting my money into whatsoever. But what I will say is that, again, the reason you put your money into something is super important, and also the why. So if me and you were going to invest into a company, well, my number one question would be, well, what is this asset that we want to put our money into? What does it produce? And what would be the return on the capital that we're actually going to invest into it? So, very simple example here. If you have a barbershop, and this barbershop, for example, is saying, hey, we're the best barbershop ever, but it has absolutely no customers, probably not a great investment, right? Although the price might be going up and up and up of the stock, because everyone is being hyped up by the idea of this is going to be the best barbershop ever. But they don't have any employees, they don't have any customers, they don't have any locations. All they have is basically a fancy name with a few promises and a few, for example, testimonials saying, we made a lot of money here. That's never a good thing. And if you look at that example here, you're going to see that example in a lot of these crypto tokens out there, that they're promising you things and they're like, but nothing's actually being done whatsoever. And the entire fizz of it or hidden agenda is, hey, we have this fancy new technology stuff and this is this and this is that, but it's not really a legitimate producing business in a sense that actually does something, if that makes sense. Okay, guys. Now, here's something else that I've actually noticed here, and this is a big warning for most investors out there. And this is a entire idea of I'm gonna go ahead and I'm gonna buy the dip. Okay. Now, buying the dip always means, for example, hey, the price was X. Now the price is X minus 1, so it's lower than it used to be. Now we just created, for example, a buying opportunity. Now, whenever Bitcoin went from 50,000 almost to 20,000 to $19,000, you might say, well, this is basically a massive buying opportunity. And you're right if the value of Bitcoin is more than 19,000 or more than 20,000. And if your idea is, well, I do believe it is that, Tommy, because it was this, that's not legitimate, right? Because it's not based on what it actually does or produces or anything like that. It's just based on public opinion. And that's why this entire stuff is so tricky in a sense, okay? Now, here's what I will say, okay? Here's an example. Again, a lot of my examples, if you can tell, they come from in the past because they're real examples, like the dot-com bubble. Now, this is the 2008 crash. Now, what was happening there, guys, okay? You had an asset that people thought would never go down, and that was real estate. And you also had, for example, flimsy laws in place, especially with banking, right? So people were buying houses left and right, people that couldn't afford the houses, and the value of these houses basically exploded. The price went up like crazy, People kept buying and buying and buying. Market going up and up and up and up and up and up and up. And when people were getting mortgages for $300,000 on a house, it was just, for example, $100,000 a few years back, it didn't seem that crazy because, hey, this asset is never going to go down. Real estate never goes down. Now, when the bubble went ahead and popped and it went from $300,000 back to $100,000 or even back to even less, well, was that right there a dip? In hindsight, obviously, it was a dip, right? Because things got so depressed in a sense that the actual legitimate value of those assets went below just because people were just so worried about it. So people were selling assets that were worth, for example, let's say it was worth $1. People were willing to sell it for 50 cents because they were so worried. But the actual worth was $1, but they paid $2 for it. So that's why they were so worried. Does that make sense? So that's the idea. So if the actual thing you're buying is being bought for below the actual value, that's a real dip. But if it goes, for example, from $2, which is inflated, now to back to $1, which is the true value, it doesn't mean you're buying at a dip. You're just buying at what the actual price is. My point is, you can't invest into something based on what the historic price was and call that dip investing, because that's not really what you're doing. You're just buying based on what the price used to be. And that's super dangerous because if it is a correction, for example, you're going to be in trouble. So my point is, if you're seeing this right now as a buying opportunity for Bitcoin and cryptocurrency, again, that's not my game. That's not what I do. But just make sure that, for example, you're basing it on real, legitimate reasons and not based on, hey, the price was $50,000 12 months ago. So imagine if in 12 more months it goes back up there. It's not that simple, and that's not how it works. That's the idea. And that wouldn't be, for example, you investing on an investment basis, okay? Because investing on an investment basis is you trying to protect your capital while making a good amount of money on your money for risking your money in a sense, okay? And the only risk-free investment out there is just basically investing in T-bonds, okay? That's like treasury bonds with the federal government because they can't default because if they could just print more money and just pay you. So that's why we call it a risk-free investment. But everything else involves risk in some way, okay? So always keep an eye out for that. Now, the last thing I will say is, guys, okay, as far as the people out there that actually want to put their money into cryptocurrency and they do believe, Tommy, this is a good buying opportunity, and it's not based on any facts, it's just based on I just want to invest money into it and I believe it, that's fine. But what I would do is basically use the 90-10 rule. Okay, 90% of my money into things I understand that are boring, that are your grandparents' favorite investments, like index funds and ETFs and so on. And then the other 10% into this, for example, very fun, risky investments and so on. Because if you do lose 10%, well, you still have 90%. So you're going to be just fine. And if you do make money on that, just leave it there. But don't sell the boring stuff to buy the crazy stuff, because that can obviously go down and then you're going to be in trouble. That's the idea. Now, by the way, remember, the big difference is that whenever you're buying, for example, let's say an index fund like the S&P 500, which is you invest into the 500 largest companies in the US, you're basically saying, I'm going to put money and invest it into America overall. So you're betting on America. But whenever you put money into Bitcoin or something like that, or cryptocurrency, the idea is, well, what are you basing that your investment is going to grow on? Is it going to grow because you believe that somebody else is going to come along and pay more money for it? Then that's called the greater fools theory. And that's a whole different game. And that's not the game I play. So that's why I invest with indexes. And my mentor, which is Warren Buffett, is very heavy, for example, just investing, for example, just into the S&P 500, which is like America overall. But I also have, for example, other investments. So the link is down below if you want to, for example, invest the way I invest, which is very boring, but it does get you rich over time. And I use M1 Finance, which is a legitimate broker, and you don't have to worry about bankruptcy, at least right now, cross your fingers. And that's the idea. So link is down below if you copy my investments. And I also have a full-blown course on financial freedom that doesn't involve you having to risk all your money and either getting rich overnight or getting poor overnight, where the odds are like a 10-to-1 split. Well, not that's actually pretty good odds. Maybe like 1,000, maybe like 1,000,000 to 1 split. I should say that, okay? Because the odds are super, super low. Okay. Well, guys, thanks for watching. As always, comment down below. And if you're gonna comment down below token and then your comment. That way I know that you're a real person, because usually these videos, especially about crypto stuff, they get a lot of robots in here and bots in here, and I really can't tell the difference. And by the way, this is my entire new studio, so that's why there is a massive echo in here. I just moved into my house, and home reveal tour coming soon. Thanks for watching. Comment down below token so I know it's you. And as always, peace. Long-term team officially out. Other video here. My face is here. Subscribe to the channel and follow me on Instagram at TommyBryson. Peace.